Hey guys, welcome to my channel. In today's video, I'm going to be going over how to become a top producing loan officer based on these books written by top producing loan officers. So this is going to be a series. I'm just doing 3 books at a time. I think I purchased like 15 or 20 books, all written by top producing loan officers. I'm going over these books, taking notes, as you can see, and I'm going to be going over all the things that I learned that I felt are super valuable for you to know in this video. 10-15 minutes, you'll be able to save the hours that I took in reading these books. So without further ado, let's go ahead and start breaking down these 3 books. Let's get started. And by the way, these books are going to be listed in the description in case you want to purchase them. By the way, I highly recommend you purchase them, read them yourself. There might be things that I missed that you feel are valuable to you in your business that stick out to you, as with any book, right? So make sure you purchase them. They'll be linked down below. And by the way, you guys, when it comes to reading and education and books, if you just get one thing from a book, it's a great book. Right? You don't need to get, 20, 50, or 100 things from a single book. If you just get one thing that gets you one deal, that's worth it. Because one deal in this business can be $15,000, $20,000, $10,000, and a book is 15 bucks. So basically what I'm saying is buy all these books and read them yourself aside from watching these videos. Let's get started. All right, the first book we're gonna go over is Mortgage Loan Officer Success Guide, written by Michael Zurin, PhD. He's been a loan officer for 27 years. So we already know there's gonna be some great content in here. The first thing that I thought was really interesting that stood out to me that I wanna go over with you guys: the more accommodating and flexible you are with your time, the higher your income will be. This is a big deal because as a loan officer, there's so many parts to a mortgage process, and you're constantly, at least you should be, you're constantly getting fed leads, right? By your real estate agent partners, by your past clients, by referrals. So it's very important that, you dedicate the time to those things, or else you're not going to be successful. One transaction, yes, it doesn't take a whole lot of your time, but if you're dealing with 20 leads, 10 escrows, all these conditions, that's going to demand a lot of your time as a loan officer. So if you want to, make more money, you're going to have to make that time to accommodate for those things. So that's what really stood out to me. It's on the second page of this book, was that you got to be flexible with your time. Saturdays, weekends, nights, when the client's like, hey, I'm not sure if I should get a mortgage, what's my quote gonna look like? And they're texting you at 2 in the morning. I'm not saying you got to send it to them at 2 in the morning, but you should probably send it to them early in that morning, right? Because a day or two later, they might be like, hey, if you don't send that quote, hey, I don't want to buy anymore. So that's a very important point here, is that this is going to demand a lot of your time. Another important thing that I loved here was thorough knowledge of the product guidelines and regulatory requirements is required for success as a loan officer. Guys, as a loan officer, a good amount of your work, maybe 50-60%, is, being a business person. The other 40 to 30% is knowing your product guidelines. The reason for that is because there's so many, and also we're not dealing with just FICO scores, just tax returns, just income, just assets. We're dealing with all these things. We're dealing with life. You need to know how the FICO score that they have is going to influence their rate, how it's going to influence their program, if it's going to disqualify them, right? Or maybe they're getting a divorce, how that's going to influence the mortgage or the refinance or whatever, right? The cash out, whatever. So basically, it's very important that you know your guidelines. You should read your guidelines. By the way, you're not going to memorize the guidelines. There's hundreds of pages, but you should, at least if you're brand new, take the time to read them. Are you going to memorize them? No, but go ahead and read them, because 1 or 2, 3 things that stick, they're going to make a difference, right? Because you are going to get that deal where you're going to be like, oh my gosh, I remember reading about this. Just the other day, I got an email from a past client who's a lawyer, and she's like, hey, by the way, one of my clients had a question for you. Here's the question. Hey, I put 20% down on an FHA loan. When am I going to get rid of this mortgage insurance? I remember reading guidelines. If you put more than 11% down on an FHA loan, I think it's about 11 to 12 years later, your mortgage insurance comes off, right? Most people do not know that. You can ask your branch manager. They probably don't know that. So things like that, they make a difference, right? If she were to, luckily this was an email, but even regardless, I knew the information. But could you imagine I get called from this lawyer, hey, I have this question. I'm not sure, let me get back to you. That's fine, that's gonna happen. But there's a difference when you can just answer the question. Oh yeah, by the way, there's a guideline, blah, 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 blah. So it makes a big difference in your business. Important point. All right, next one is, and this is on page 5, the lending institution you work for will have a direct impact on your success and income. Guys, that's huge. I can't tell you how much money, I don't even want to know how much money I lost when I was a direct lender. So if you haven't seen my previous videos where I go over the different types of loan officers, I'll tell you right now. So there's the retail loan officer, there's the direct lender, and then there's the mortgage broker. The retail loan officer is the one working at Wells Fargo, Chase, etc. They get paid a very, very, very small commission off of every deal. I don't know the exact number, but it's very, very, very small. And they also get a salary. So that's them. They only have Wells Fargo's programs or Chase's programs. So you're very limited, and they're also very strict in the requirements. For example, their DTI ratios are maxed out at 43%, I think, for the most part. Whereas a direct lender and a mortgage broker, it's 55%, meaning what that means is your borrower can qualify for more as a direct lender or working with a direct lender or a mortgage broker. And then there's also the direct lender. That's what I started as, a direct lender. I had no idea mortgage brokers existed. A direct lender works at a bank that just does mortgages. Now, this is better than Chase and Wells Fargo because the requirements aren't as strict, but you still just have one bank's programs, direct lender. It's just a bank that does mortgages, one bank, and that's it. Then there's the mortgage brokerage where you're working with 150, 200 different banks. So that means you can shop around for better rates for your clients, right? There's more chances of your clients getting approved because you have 200 banks to choose from. Whereas at a direct lender, my problem was, if I didn't have the program, that was it. I couldn't do anything. Or if the client, wanted to get the lowest rate, I couldn't really help them. I lost 4 clients, because of the rate or because of the program. Commission would have been like $100,000 between those 4, clients. So that's a big deal. All right, the next one is many successful loan officers learn the ins and outs of mortgage finance from an experienced and highly successful mentor early on in the development of their career. Now, this is huge. This is really big, you guys, because it's not impossible to be a top producing loan officer. It's not impossible to even be a good loan officer. Anyone could be a loan officer, I believe. The problem is the reason so many don't make it is because you can only go so long without success, without results. Imagine not closing a deal for 2 years. You're going to want to quit. You can only lose for so long. That's the problem, is that there isn't, or that's the problem that people that don't have coaches or training or coaching is they come in and it's like 1 month, no deal, 6 months, no deal, 1 year, no deal. Maybe they have a full-time and they're still paying their rent. They're not losing any money, but still you can only go for so long without closing a deal. It gets frustrating, right? So that's why I highly recommend for you to, consume as much training on being a loan officer. Again, get all these books, watch all my videos, check on my website. I have materials. I'm also going to launch a university, training, all that good stuff, because guys, this is a great career. Don't let the fact that you have to watch a coaching program for an hour or 2 hours or 10 hours or pay, $500 for materials or $1,000 for coaching or whatever. I don't know. Don't let that keep you from succeeding in this career, because that's what it's going to take in any career. The only difference is that in this one, there's much more to learn. And so there's much more you got to invest in yourself. And that's why, he mentions you need a mentor. The next one is, it is essential for newly licensed loan officers to develop competencies, gain confidence, and hone their abilities quickly due to the nature of commission-based compensation. This is also big. I get a lot of questions. Hey, Enrique, I'm a single mom and I'm thinking about jumping in, or hey, I have all these, debts and I have 6 kids or whatever. And I'm thinking about joining the business and I'm going to leave my job where I'm making 200 grand a year. Do you think I can make 200 grand my first month? Probably not. First year? Probably not. First 2 years? Probably not. It's not impossible. Again, back to the coaching. If you have the coaching, you can make 200 grand in 1 month. But, it's going to take time. And what I love about this point is that it's a reminder of you need reserves, especially if this is the only income source that you have. If you're only doing loan officer, I would say you need 6 to 12 months reserves. I would do 12 months reserves. I'm always conservative. I would do 12 months reserves. So if your living and rent is like 5,000, I would have at least, 30,000 in my bank account. I would even want to have 50, because you can go 3 months, 6 months without a deal. Yes, some deals you're going to make 20 G's, but you might only have one deal that's 20 G's over the period of 6 months. That's not a lot of money, you guys. So take care of your commissions, have your reserves, because it's commission. You're not closing every single month, at least not in the beginning. You could, but make sure you have those reserves. All right, next one. This one's really cool. This one's really fun. Is use drive time to respond to voicemails and follow up with prospective buyers. I actually love this. For me, probably for you, for some reason, it's easier to make follow-up calls when you're driving. When you're at your desk, you get kind of nervous, you get kind of shaky, you don't know what to say. But for some reason, when you're driving, it's easier to make these calls. So in the morning when I'm heading to the office, I'll check my list of buyers I need to follow up with for documents, etc., or status updates, and I'll just make those calls. Hey Bob, how's it going? I need these documents. Okay, sounds good, blah, blah, blah. Oh, hey Bob, how's it going? Tracy the realtor gave me your information, told you to give you a call because you want to buy, blah, 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 blah. But yeah, it's a great time to make calls, because what else are you going to do when you're in your car, right? So use that time to follow up. It's easy, it's fun. I just thought that was really cool, because I know sometimes when I'm on my desk, I'm kind of scared to follow up, or call reluctance, but when you're driving, it's easier. So try that out. This is another great one. Focus on quality, not quantity. Quality, not quantity. This is big, you guys, because just like baking, just like medicine, if you're off by a few millimeters, by a few ounces, by a few milligrams, things can go terribly wrong, right? You put too much flour in the cake, too much flour in the pancakes, or you forget to put the egg, or you forget the yeast, you don't got a cake. Same with the medicine, right? That's even worse. So when it comes to mortgage lending, you need to focus on quality. You can't just be spitting pre-approvals without even talking to the client, without even going over documentation, right? Or you can't even do it. I wouldn't even issue a pre-approval just off of a conversation with the client. Look at the documents, right? Do a deep dive on those documents. It's not even that people are lying to you. It's that they don't even know their numbers, right? They think they have a 750. They truly believe that. They're telling you 750. You run the report, they have a 650. Who knows? That's just the way it is. So always go off the documents, but you make sure that it's quality first in your business. Because it's also, I'm kind of going on a tangent here, but it's also a reputation business, right? As a banker, as a loan officer, you're expected to be someone that's trustable, right? So carry that with you. Be that. Be dependable. Be trustable. And that means quality. Someone says, hey, I'm pre-approved by Enrique. I know he's going to get it done. Quality first. You can work on the speed later, but quality first. All right, next one is have a personal newsletter with useful mortgage and real estate information. I've been talking about this for a while now. The newsletter is key to your business. It's super key, because you're not going to have the time to follow up with 1,000 leads, 500 people. And most of the time, they don't even want to talk to you, right? Who wants to talk about mortgages every week? No one does. But that doesn't mean you shouldn't give them a taste of mortgages every week or every month. If you guys need help, I do have a product on my website, enriqueandgreatness.com. Go under store. You'll see I have a newsletter package where I'll teach you how to make a home buyer newsletter for the people that are renting, a partner newsletter for your realtors, and then a monthly newsletter for all your leads in your database, whether it's past clients, leads, pre-approvals, etc. And you can also check out some of the reviews. People are loving it. I'm always getting compliments by realtors and even clients like, Enrique, you forgot to send me your newsletter. Please send it. Sometimes I'll be sick and I send it out every Monday, 8 a.m. sharp. I'll be sick. I'll send it like at 2 p.m. on a Monday, and they'll freak out, be like, hey, Enrique, I haven't got your newsletter. I really want to see it. And that's how much they love it, right? Or I've gotten compliments, hey, Enrique, this is my favorite part of your newsletter. By the way, keep sending it. I love it. So if you want to make your own, make your own. If you want the same one that I'm using, that I've used in my business, I've developed it over the past 3 years, check it out. But that's going to be big because it keeps you in front of your client without having to call them, right? You can send them little updates about, rates or whatever, but it's a great way to stay in front of people, stay in front of your realtors, by the way, right? And we're not just talking about clients here, staying in front of your realtors. Can you call 100 realtors a week? No. Do you want to call 100 realtors a week? Probably not. What if you could contact them, those 100, without even contacting them through your newsletter? This one's interesting. Once you have been in the mortgage profession for 3 or 4 years, the majority of your business should be generated from your past customers. Now, if you're new, this is not really gonna, help out too much, but it is gonna help in the sense of the way this happens is by delivering great service. If you deliver bad service, that's not gonna happen. On the 3rd and 4th year, it's not gonna happen. But if you're delivering great service on your 3rd and 4th year, I guarantee you it's going to get easier. So if you've been doing this for 1 year, 2 years, and you're struggling, know that in your 3rd and 4th year, you're going to get there. It's only going to get easier because more and more people are going to know that you're a mortgage broker or a mortgage loan officer or whatever, right? More and more people are going to know what you do. And you're going to be helping one family. They're going to tell everyone they know about you as long as you did a good job. So that's really interesting. It's a little bit of motivation for you guys that are on your 1st or 2nd year and you're like, Enrique, it's terrible. I want to tap out. Keep that in mind. 3rd or 4th year, it gets easier. Even for myself, I'm going on my 4th or 5th year right now. It's a lot easier. All right, and the last one for this book is, as you reach major milestones during the loan process, you should contact your partners and the customer to inform them. Now, I know this one seems super simple, super obvious, but as with all these things, it's not just about knowing them, because we all know this, right? It's not just about knowing them. It's about understanding them and applying them, right? Putting these things in as policy in your business. As you're watching this video, as you watch the rest of this series, make sure you're always, okay, I know what Enrique is saying. I understand it. How can I make this a policy in my business? Because if you don't make it a policy, you're not going to do it, right? A policy implies that you have to do it or that you should do it, right? It's policy. This is what has to be done. It's like a playbook, right? If you have a playbook in, football or basketball and they say do play X, you're going to do play X, right? If you go off of that, you're not doing the playbook. You're not doing the policy and you don't get the result. You don't get the hoop, right? So as with any of these, you got to make sure you add the policy. For the case of this one, sending updates. Maybe put a policy, hey, always email and call the client when I get loan approval. Always email and call the realtor when I get the appraisal. Always call and text, blah, 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 when I get this. Or always email escrow that we got the loan approval, or whatever. But make sure you set up these communication lines that go out, these milestones. Some lenders have it automatically, but you want to have it for yourself. Do it for yourself. Even if it's as simple as an email. Hey, Bob, we got the clear to close. Congratulations. I'll, check in with you in a bit once we get the next update on the milestone. Whatever. Try to make it cool. Maybe add some pictures. Maybe add a video. I don't know. I've seen some people do videos. Hey, Bob, it's Enrique. We have the loan approval. Good job. Blah, 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 blah. I don't know. But make this a policy in your business because it's a communication of, a step that you're getting closer to the closing. So very, very important in your business. I started doing this. It makes you look good. It makes you look like a professional, right? Because 1 or 2 days, I've noticed, people get scared. Like if you don't talk to a client in 1 or 2 days, they're like, what's happening? What's going on? So even if you don't, I'm going to add this. This is a tip. Even if you don't have a milestone update, maybe, you're still working on conditions, still let the client know, hey, we're waiting on the appraisal still. That's all the update we have. Hey, we're still waiting on those conditions. That's all the update we have. Because if you don't talk to them for 1 or 2 days, they will freak out. So again, that's pretty much for this book. Those are my takeaways. Those are the things I loved. Obviously, there's a lot more stuff that I highlighted, but those are the things that I really want to share with you guys. Make sure you buy it and you read it. More things are going to pop out to you that I didn't include in this video. And the next one is going to be 101 Mortgage Career Tips by Zoe Azubiki. I actually really enjoyed this one because I didn't have to do a whole lot of reading. It's literally just bullet points and then a quick explanation, which, I enjoyed. Because as you know me, I try to stay to the point, just short, simple, sweet. The first one is get your clients better rates. Guys, this is a big deal. It's sad to say, but, maybe more than half or maybe half of the reason someone is going to decide to work with you is the rate. The next one is understand the different kinds of lenders that are available to the consumer. We just went over them earlier. There's the retail, the direct lender, the mortgage broker. Super, super, super critical that you know what those are, guys. Like I said, I've lost, $100,000, $200,000 by not knowing that mortgage brokers existed, or else I would have started as a mortgage broker and I wouldn't have lost so much money. So make sure you know what those are and which one fits you. That's not to say that you're not going to succeed as a direct lender or a retail. It's just each one has its pros and cons. It's up to you. For me, I was dealing with a lot of clients that are business owners, I-10, 20, 30, 40% down, $2 million deals. And at a direct lender, even at a retail, you can't really do those too much. Just because the programs aren't kind of fit for it. So yeah, make sure you know the different types of loan officers and which one you want to be. All right, the next one, this one's pretty interesting. This one's pretty cool, and I can attest that it's very, very helpful. Call your underwriters. Most of the times we get a list of conditions and we're breaking our head. Oh my God, I don't know what to do. I don't know what to do. I don't know. But it's like, I've had it happen before. I get on the call with the underwriter and I'm like, hey, I don't understand this condition because the borrower is blah, 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 blah. Underwriter's like, oh, I didn't know that. In that case, forget about it. Done. Right? So now some banks, you cannot speak to the underwriters. So it's case by case. So yeah, if it's possible to talk to your underwriters, do that as much as possible. Even if it's just say, hello, thanks for the loan approval, whatever. But it's very, very key because again, that's going to happen where you're like freaking out and it's a simple solution because the underwriter doesn't know your borrower, guys. We forget that. The underwriter has never met your borrower. They don't know the story. They're just looking at numbers. So sometimes you just need to call them and be like, oh, this is the case. This is the situation. And they'll be like, okay, in that case, I don't need that. And by the way, this is that, blah, blah, blah. So call your underwriters, makes a huge difference, saves you time on going back and forth with conditions. Next one is host lunches for realtors. These are really cool because you can also teach a class, right? This shows you as someone that's, credible, knowledgeable, caring, and you simply show up, right? You're showing up. A lot of this is just showing up. So it gives you an excuse, a reason to just show up to the office. Hey, I'm doing a training. By the way, there's food there. When I was a direct lender, my manager would do these all the time, and it was a good source of their business, is just doing these lunch and learns, hosting lunches, doing a training on programs, etc. Really, really helped them out. And, that's why they're branch manager top producing, because they were doing this exact point. Next one is attend open houses. And I would expand on this on door knock open houses. Enrique, what does that mean, door knock open houses? What do you mean the door's open? Well, how do you not? Door knock open houses and attend them. If you have a real estate agent that's like, hey, come do an open house with me, okay, go for it, do it. There's a whole thing that you can do where, you can bring flyers, blah, 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 blah. But anyways, door knocking open houses, I think is much better and more efficient because what I do is I go to an open house, I bring a folder, right, with my booklet. By the way, it's on my website, my home buyer guide, it's custom made, a home buyer trifold, some flyers, my business card. Hey, my name's Enrique, I'm a loan officer, just wanted to give you this, just wanted to stop by, I know you're busy. Oh, by the way, can I take your business card? I'm gonna add you to my newsletter. Oh yeah, that's fine. And if you don't like the newsletter, you can always unsubscribe. Totally fine. And then I walk out. I'm not trying to sell them, I'm not telling them I'm a perfect loan officer, I'm the best loan officer. They don't want to talk about that stuff. If they do engage, go ahead and engage in conversation, but I just do that. Hey, here's this, let me get your card, adios. I go home to add them to my newsletter, right? And then again, make sure you got to have a newsletter. If you don't have a newsletter, you got to get one. So go on my website, get it if you don't have one, if you don't want to make one. You make a newsletter, they're getting follow-ups. I had a realtor that called me, Enrique, can you do a presentation for me at my office because I'm getting your emails, your newsletters, and they're amazing. I love how, detail-oriented you are and your materials. Ta-da, right? They're calling me, right? So, door knock open houses, that's my exact formula. That's what I do. All right, the next one, in the beginning, I actually knew this, but I was really, really scared, is call listing agents on offers. Very simple. I heard about it when I was new, but I was super, super, super scared to do it. And really, it just comes down to knowing you can pre-approve someone, knowing how well you pre-approve them, being confident. A lot of this is confidence, you guys. It's impossible to teach confidence, right? Because confidence is a side effect of knowledge, of certainty, right? If you make someone certain about some piece of information, they're going to be confident in it, right? If you meet a soccer player that's confident, they're confident because they know they can play. And they know they can play because they know they can play, and they know they can play because they know how to play, right? So if you want to, get over that call reluctance with listing agents, be super, super certain that your client's pre-approved. Yo, Bob, I'm calling you about Jill. Jill the buyer. The realtor is Jane. We just sent over an offer. I'm the loan officer. Just wanted to introduce myself. By the way, the clients are amazing. They're my favorite. They're fully pre-approved. I went over all their documents, tax returns, pay stubs, bank statements. Already have the DU approval on there. Blah 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 blah. They're amazing. That's it, right? But you can't say that if you're not certain. So just increase the knowledge, increase the certainty, increase your ability. You don't even need a script. I don't do scripts because if you have certainty, the confidence comes out. So you don't need scripts. All right, the next one is going to seem a little obvious, but he put it here because a lot of loan officers don't actually do this, and that's provide loan estimates, previews at pre-approval. Basically, provide quotes. You'd be surprised how many people I talk to. Oh yeah, I was with this other loan officer and they didn't show me a quote, or they assumed that they couldn't ask for a quote or get a quote until they were at closing, which is like crazy because imagine getting a mortgage and not knowing what your mortgage is going to be until you close. Like, what if it's a $5,000 mortgage? What if it's a $3,000 or $10,000 or $8,000 and you don't like it or you can't afford it, right? So very, very, very important that you're always giving your clients quotes, even if they don't ask for them, right? If they ask for a 5% conventional, give them a 5%, give them a 10%, give them a 15%, give them a 3%. That way they can see. Don't just assume that, the numbers they want are the numbers that are good for them. Right? Yes, they're going to choose, but still you should give them the options because there's options that they don't know exist. So make sure you're always giving quote. That's a very, very good point. All right, this next one is one of my favorites, probably my most favorite in this book. Be good to your processors. Very, very simple, but your processors, especially if they're in-house or in the office, like our processor is here in the office, so I see her every morning. Show love to your processors, be good to your processors because, they're out there batting for you. You're out there in the field doing the consultation, talking to the client. They're like in the deal, right? They're like, doing the numbers, all that good stuff. So make sure you show love and support your processors. Hugs, high fives, whatever, little chocolate, whatever, but be good to your processors. Why is this important? Because they're handling the file. Right? Aside from yourself, they're handling the file. And all I know is that when you treat people well, when you treat them really well, they're going to treat you well, and anything that you give to them, right? In this case, we're talking about loans, right? Any communication, any projects, any products between those two terminals that have a good relationship with each other are going to be good. Right? If someone that you don't like is like, hey, go do this for me, you're not going to do it. You're not going to do it very well. But if you like that person, you're going to do it very well. So that's kind of the whole, idea about this is, acknowledge them for their good work, because if you acknowledge them for their good work, they're going to, give better work. It's like a boss. If a boss treats their employees right, they're going to do a better job at the job. If they treat them bad, they're going to start breaking things. They're going to start, falling over and falling on their face or whatever, or breaking a bone. But so make sure you do that. Very, very important. I love that point in here. Post videos of borrower testimonials on social media. I actually just started doing this. It's a little twist on this where it's those little videos where when they're getting their keys, you make it into like a whole movie. You could check my channel, my Instagram, where I have one where it's a family that we helped, 0% down program. And we did a whole video shoot for them at the handing of keys. It's like a 60-second video, but it's done professionally. It shows a video of us walking up to the house. The clients are coming in, slow motion, all that good stuff. We share it with the client. They share it with their family and friends. You start getting referrals out of it. So it's a great way to, show the client you appreciate them, give them a little memory, right? Because it's a little video of when they got their home, when they got their first home, when they got their keys. And then also their friends are going to see it. So they're going to start reaching out to you because you're going to be in the video, right? You're the one that helped them. So it's a great, great way to put yourself out there and build your PR, public relations. All right, number 10, the last one is understand the role of account executives. If you're a mortgage broker, you're going to be dealing with account executives. That's basically someone at one of these banks, one of these 180, 150, 200 banks. All they do is answer questions about programs. That they're there to help you, right? So you don't have to worry about, waiting for your manager to get you a response, because they might take 2 or 3 days. They're busy. Account executives, all they're there to do is answer your question, right? So if I have a question, I have like 20 contacts on my phone that are all account executives, and I'll copy and paste the question. Hey, this is my question. I send it to all 20 of them. I get at least one answer in 10 seconds. So it's like, there's no need, there's not even really a need to be a genius in this profession, especially in the mortgage broker, right? Because you have all these AEs that have your back. You ask them the questions, right? You can triple, quadruple check because you're sending that same question to 20 account executives. So if all of them say no and one of them says yes, you're gonna be like, I don't think they can do it. Maybe they're just, maybe they don't know. Maybe they can, I don't know. But you still, have that freedom of, being able to triple, quadruple check things or even get a fast answer from these account executives. So make sure you leverage that. Ask as much as possible. Don't be afraid to ask questions here, you guys. Call them 20 times a day, call them 100 times a day. They're going to appreciate it because that's what they're there for. And on top of that, you don't want to go to your client and be like, I messed up. Worst thing. So make sure you leverage your account executives. All right, the next book is The Loan Officer Revolution by Rick Elmendorf. Been in the business for 25 plus years. The first thing is in regards to real estate agents, and that is seek excellence regardless of experience. So as a loan officer, you're going to be working with a lot of real estate agents, and you shouldn't just be like, hey, I just want to work with top producing real estate agents. No, work with greatness as an individual, as a person, right? That may mean they're brand new. That may mean they've been doing it for 1 year, 2 weeks, maybe 1 day. But if they're confident, if they care about people, if they're determined, if they're driven, work with that real estate agent, help them out, right? Don't be so focused on, I just want to work with top producers that have 20 years experience. No, work with the people that you want to work with good people, work with hardworking people. Those are the people I want to work with, regardless of the experience, regardless of the years, regardless of the deals. Work with those people because in the long run, it's going to benefit you and your business more. All right, the next thing that I want to go over in this book that he mentions is blogging. He says you should have all your agents read your blog regularly. I would add to that your clients, right? Write a blog. You don't need to be, a college educated Harvard, Oxford person. Just write a blog. Just write like having a conversation with the borrower. Hey, these are the 3 programs I recommend the most. That's a title. Hey, the first program that I recommend, blah, blah, blah. By the way, it has these requirements. By the way, it has this. So write these blogs because, it's a source of information, number one, to deliver to your consumer, which is the client, also your real estate agent. It's also, a reason to follow up. Hey, Bob the Realtor, did you get my blog? Did you get my article? Did you read my article? Do you have any questions about my article, right? Same with the client. Hey, by the way, I write articles. It shows, this is the third thing, it shows credibility. Right? It's all about credibility, making you seem more credible, right? If you're writing articles to that degree, you're more credible, you're more knowledgeable because you're writing something. That means you know something. So make sure you write, articles, try to get a website. I'm not sure how you can write one. I write it on my own website. Try to generate your own website. It's like 15, 20 bucks, you guys. You got to invest in your business. I get so many, I talk to so many loan officers. I'm like, hey, this thing is 20 bucks a month. This thing is $5 a month. And they're like, oh, that's kind of a lot of money. It's like, dude, you got to invest in your business to be successful. So get a website, whether it's Wix, Shopify, I don't know what's out there these days, and start writing your articles. If you don't have money, maybe do a LinkedIn article. I don't even know you can do a LinkedIn article. Maybe do a post on LinkedIn that looks like an article and call it an article, whatever. But blogs are a big deal, especially when they're really good, because when they're really good, you can send it to all your realtors, send it to all your clients, call them about it, what you think, etc. All right, the next thing that he mentions are movie events. I actually really like this one. I haven't done one yet, but my brother, it was actually his birthday a few months ago, and he rented out an entire theater to show the Lilo and Stitch. So that was actually really cool. It was really fun. And that's kind of what he's mentioning here, is renting out a whole theater, picking a good movie, obviously not a rated R movie, and then inviting your clients, right? And then he also mentions how he gives like a little speech before they start playing the movie. Hey, my name is Bob the Realtor or Bob the Loan Officer, and I want to thank you all for being here. If you have any family and friends that want to do a mortgage, reach out to me, blah, 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 blah. But yeah, it's really cool. It's really fun. It's a way to reach out to your clients, have them show up, watch a movie, enjoy. You know, it's another way to get in front of your customer. That's fun. So yeah, it's those movie events where you rent out a theater. That way they're all there. They can see you. They can bring their family, maybe like a +1 or a +2, whatever. But yeah, I thought that was really cool. I have heard a lot of real estate agents that do that. I don't know too many loan officers that do it, but I thought that was really cool. Next one is coaching is the absolute best way to add value to an agent partner. That is so true. So true. I can't tell you, I mean, almost every real estate agent I work with, I'm always teaching them something every time I speak to them, every time I'm on, on a call with them, because there's so much to learn in this business. There's things that they know that I don't know. There's things that I know that they don't know, right? There's things that you don't know that they don't know. So, it's really powerful just with anyone, right? If you can speak with them and learn something. How fun is it when you're talking to someone, you're like, oh, I didn't know that. That's cool. Thank you for letting me know. Oh yeah, I didn't know that too. You want to be with that person more. So same with the realtor, especially because in this business, there's not a lot of training. So they're like, oh, if I talk to Enrique, he's going to teach me something. They're going to be more likely to call you, to send you clients, because they're like, not only does he teach me, he's probably teaching my clients and he probably knows what he's doing. So I'm going to send him some deals. So very, very important to do that. You got to be knowledgeable though. You can't teach someone if you don't know anything, right? You can't grow if you're not learning, right? The only way to grow is to learn. If you're not, teaching yourself things, you're not going to learn anything. So very, very important that you also, do your own homework, right? Get your own mentor, get your coach, watch these videos, etc., read books. That way you can add value to the agent. All right, the next one are annual reviews. And I'm not going to go over everything he says here. It's on page 48. But basically the whole idea is on a yearly basis, reach out to a client and go over, their finances in terms of mortgages. Hey, property on blah, blah, blah street has a 2% rate. And right now rates are at, 0.5%, whatever. Right now rates are at 7% and you have a 9%. Do you want to refinance or do you want to do a HELOC? Do you want to consolidate? Do you want to cash out? So this is nice because, borrowers don't know, they're not going to know everything, you guys. Maybe they have like this big debt that they got. Maybe they just bought a Ferrari, they just bought a new car, they just bought a Tesla, and they can't keep up with the payments. They can consolidate that debt into their mortgage. How helpful is that? And their payment might go up like $50 because now they have that, right? Reach out, do these. I haven't done one yet. I'm still building it up. But again, it's good to know it. Add it to your policy. Make sure you read this. That's something I'm definitely adding to mine now. That way every year I can have these with my clients because you never know what they need, what's new. Maybe rates go up, but they still want to refinance because they want to pay off that Tesla, whatever. But yeah, that's a very, very good point that I liked here. Annual reviews. The next one is actually really cool. Rick actually helped us. This is a testimonial from his client. Rick actually helped us seal the deal with his offer accepted program, where he makes a proactive call to the listing agent, makes a guarantee, and I guess just does his thing. Right? So the client's basically talking about how they got their offer accepted because Rick called the listing agent and made his pitch, right? Like we talked about earlier in this video. Call the listing agent, be super confident, right? Because they're going to hear you on the phone. Confidence, you can hear it through tone of voice. Now that doesn't mean you have to have like this crazy tone of voice, right? It just means it's an energy, it's an intention, right? It's a vibe. The confidence. So if you call, you're confident, you did a good pre-approval, you call the listing agent, higher chance of that client, getting their offer accepted. So go ahead and do it. Like I said, in the beginning, I was super scared until, I was like, what is there to be scared of? I'm super confident that my client's pre-approved. All I'm going to do is call the agent, introduce myself and say, the client's super pre-approved. They're ready to go. Any questions? No? Okay, bye. That's it. So I love that he mentioned that here. The last thing that I thought was very unique was that he has a post-closing survey. This is actually the last page, page 98, a post-closing survey. So they reach out to the client, hey, how did we do? That's big. How did we do? Quality control. Do you have a quality control department in your business? He does. Most people don't. Most businesses don't. Especially in this business, loan officer, realtor. They deliver a bad service with one client. They still get paid. They still close it. But they never go back and are asking themselves, what did I do? What did I not do to make that experience bad? And how can I make it better? How can I make policy to where it doesn't happen? right? So they have a post-closing survey. Hey, how did we do, right? So add that to your business too. I know I need to add that to my business, right? So add that. It's gonna help you learn, right? Because they're gonna say, oh, I thought you did great, but there's this one thing that I thought could have been better. Okay, cool, you make the changes. Now the next client has an even better service, right? And it also shows the client that you're interested in their experience and that you're interested in being better. So maybe the first time they didn't work with you wasn't great, but they're like, oh, Enrique really cares. Next time it's gonna be better. That's pretty much it for today's video. Thanks again, see you in the next one, and be great.